everyone. Welcome back to another episode of my weekend market analysis series. Today, we are diving deep into the gold market once again, setting the stage for what could be a pivotal trading week ahead. Last week's bullish momentum, fueled by the Fed's unexpected 50 basis point rate cut, sent gold soaring to a record high above the $2,600 zone as investors flocked to the safe haven asset amidst rate cut expectations and ongoing geopolitical tensions. As you will see on your screen right now, this was our trading setup prior to the beginning of last week. And of course, we had a simple trading setup where we had our key level situated at the 2530. And of course, we were thinking that due to theoretical expectations that we might likely see price retrace back into structure before the uptrend continuation happens. However, this was not so. As you will recall, this was where price action was at the beginning of last week when we were expecting to see how the market will react to the structure to determine whether we are going to be buying or selling. And of course, we had the privilege of joining the initial momentum for the week, which was bearish, as we saw about a 300 pips move to the downside before that uptrend scenario begin to build up momentum on Wednesday's trading session following that Fed interest rate decisions that came in. And of course, we were privileged to capitalize on the uptrend from the 2,569 area, taking advantage of over 500 pips in our favor. Kudos to everyone who stayed faithful to our analytical approach for last week. Well done to you guys. Now, as we look ahead, most central banks may follow the Fed's lead, adding further support to gold prices. But it's not all straightforward at the moment, as outflows from Chinese gold ETFs and slowing central bank purchases suggest that there could be bumps along the way. Still, with the bullish positioning from major funds and CTAs, gold is poised for potential new highs. However, it is worth noting that gold is now in uncharted territory, which could lead to unexpected profit taking as some traders might look to lock in gains driven by a fear of missing out. Hence, this mix of institutional buying strength and potential selling pressure could bring some short term volatility during the first half of next week. So, what does this mean for next week's trading? Well, in this video, we will be breaking down the charts, identifying the trend, key level, and map out the best structural patterns that could reveal where price is heading. Stick with me on this one as we strategize together on how to navigate the potential big moves that are just waiting to unfold. As always, remember this presentation is designed basically for educational purposes only and not financial advice. Ensure to consult a financial advisor before making any investment decisions. Now, with the groundwork laid, let's jump right into the business. So, for this week, my first point of contact will be on the 4 hours time frame, where I was able to identify a simple trading setup that will be guiding our trading decisions for next week's session. But since I'm going to be going right into the 4 hours time frame, I would like us to first of all keep tabs with the fundamental factors that may likely influence the sentiment in this market for next week. Now, let's turn our focus to the upcoming events that could shape market sentiment next week. By reviewing the economic calendar, we can pinpoint how this upcoming event will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. So, right here on the economic calendar and based on the asset we are monitoring for next week, we will be focusing on high impactful event from the United States economic docket. Now, the first event for next week is coming in on Monday, September 23rd, and this is the S&P Global Publications on Service and Manufacturing PMI. Now, this data offers a key insight into the health and performance of the service and manufacturing sector of the US economy. And of course, these reports provide valuable data on factors such as business activities, new orders, and employment levels, which can directly influence the sentiment in the market. Now, the next impactful event will not be coming until Thursday, September 26th, and that is the gross domestic product annualized for quarter 2. You see, this data here expressed in annual growth rate measures the total value of goods and services produced by the US economy in the last quarter. Then on that same day, we will be looking forward to the Fed chairman's speech, where his remarks will be providing the market insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Then finally, on Friday, September 27th, we will be looking at the core PCE and a data which measures inflation by tracking prices of goods and services, excluding volatile food and energy costs. And of course, we all know that a higher PCE reading indicates stronger inflation, which can lead to a stronger US dollar as investors seek higher returns in the US. Now, with this high impactful event we are looking forward to, let's see how the behavioral patterns of market participants has evolved into this event. And of course, it will be giving us a structural detail that we are going to be using to navigate this market next week. Now, that brings me right back into our 4 hours time frame where I was able to take into account the character of price action since the month of July of this year. That's historical data of about 2 months. And the first thing I was able to come up with here is the fact that price action has been on an uptrend scenario. And to further emphasize the strength of the buyers in this market, you will see connecting the series of higher lows, we have a couple of ascending trend line to guide our trading decisions for next week. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the structures, we want to continue to look out for patterns and structures that support the idea of buying this commodity. Now, in addition to the ascending trend line is our key level for next week. So I will zoom into the structure so we can see things more clearly. So my key level for next week is going to be at the 2590 area, a level which was a selling niche through the course of the upper week and last week trading session. As you will see, we saw how it was initially difficult for buyers to break out of the structure. This continued into last week trading session before we finally saw the unexpected interest rate cut, which gave gold prices the momentum to break out of that particular structure. Now, with this scenario we have here and with a key level at the 2590, I would like to remind us how our key level usually help us to navigate the market for the new week. Now, as long as price remains above our key level, we definitely want to continue to look out for patterns and structures that support the idea of buying. Now, if we take into account the breakout of that key level during last week's trading session, theoretically, it is expected that at some point in time, price is likely going to come back to retest the structure in an attempt to continue that uptrend move. Now, if we look at the distance between where price action is right now and that structure, we are talking about over 300 pips move, which I do not want to miss out if it eventually happens. Remember, price is within uncharted territory, and psychologically, we usually see the emotions of fear come in, where majority who had capitalized on this uptrend may want to start taking profit out of fear of missing out, and this could lead into price retracing back into structure. So I will be looking forward to see how the market is going to be reacting to this record high area at the beginning of next week, where continued selling pressure or evolution of price action into a reversal pattern like double top, head and shoulder could incite selling ideas back into either the trend line or the 2590, where depending on how price now reacts to the structure will determine if we are continuing the uptrend or a downtrend if price breaks down the 2590. However, if that is not the case, and in contrary, price continues to show signs of strength at the beginning of the week, then the evolution of price action into an uptrend continuation pattern around here could welcome buying opportunities at the breakout of that highest point. So let's see how the market is going to play out around this area. You would agree with me that we are at a crucial juncture where, depending on how the market reacts to this area at the beginning of next week, will determine what our next line of action will be. Trust me, I will be with you in the comment section of this video on Monday morning after monitoring how market will react to this area during the early hours of the week to give us an insight into what I think will likely happen. So there you have it, my in-depth look at the XAUUSD for the incoming week. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me, and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.